Good afternoon, everybody. Welcome to your Thursday edition of the TraderMerlin Show, a day where our PPI numbers disappointed significantly. We talked about in yesterday's show CPI and PPI data. Today's numbers were much greater than expected. Of course, we'll talk about that. I'll show you the economic data, and then we'll circle back with which I think is the story of the last few months. It's just that dollar strength. I was actually expecting a little bit of a pullback today. Nope, we did not get that. Actually, just showing even more strength. So we'll talk about that, the impact it had on commodities, run through the markets, economic data, and a whole bunch more. And of course, a shout out to everybody who's joining us today. We got an active group, so hello everybody. Good to see you all joining me today for our Thursday session, which is the 14th of July. All right, let me start off by going through economic announcements, earnings announcements, because obviously this is the day. Today we started with a kickoff for earnings season. Normally, those financial firms kick it off, and it's been great. This time, not so much. I'll show you what happened there with those. So let's start things off with our economic and earnings announcements for the day. You've got, for the 14th, you can see the top there, JP Morgan and Morgan Stanley. Those are the two main names that came out today. Of course, you know, Ericsson, I guess, is important to somebody, but not really as a major market mover. So JP Morgan, Jamie Dimon, boo and hiss all you want. He still runs the largest bank in the U.S., missed their earnings target, not by a ton here when you go to the final numbers, but all in all, what was noteworthy about this was they actually, or Jamie Dimon, doubled down on his comments about the economy going forward, and basically saying, you know, you've got a hard and a soft landing potential here, and from his perspective, it's looking more and more like a hard landing, which is interesting, having, you know, a guy who runs one of the biggest banks to be kind of a purveyor of doom and gloom. So that was fairly noteworthy. I'll show you the price charts here in a second. Morgan Stanley also missed their earnings and suffered the consequences. Of course, it was only down 0.39%. JP Morgan's down 3.4%. So let's take a peek at those charts just for fun. JPM, to give an idea of where it's at. If you're looking for an opportunity on Friday's trading session, keep your eye on JP Morgan. You guys know I love hammers and shooting stars, and look at the candle it formed today. I mean, this is what's called a dragonfly doji. Dragonfly doji is where you have the open and close right about the exact same price near the very top and a long bottoming tail. This tells you that at one point JP Morgan was getting slaughtered today, and then all of a sudden it ripped back up, closed right near the highs. Now, granted, it was still down 3.49%. So at the end of the day, you're like, oh, that's terrible, but it's really not that bad considering at one point it was down over 5%. And here we finished down just 3.49. So not too bad for JP Morgan to finish, but I'll put some lines on this chart as I like to do for shooting stars and hammer formations. If we get above 108.25 tomorrow, 108.25, so we have to open up below 108.25 and then start to move through that. This could be a gap fill play for tomorrow, so keep your eye on that one on Friday's session. And then the other bad boy out there, Morgan Stanley. Similar picture, but it didn't have the big gap down. You've got this giant hammer formation formed right now. It is after a series of negative candles, so about the past 2 weeks has been trending down there for Morgan Stanley. I'd put a line right across the top there and say, you get a close above 75.10, you might look to take this long as, there's audio, right? There's Bear Betty audio. Yes, there's audio. You're freaking me out, Joe. Every time I see you guys complain about audio or something, just tell me that you can hear audio group out there, just so I know that I'm not chatting to myself here. Usually, if it's off, more people will be commenting. So, Joe, might be yourself. Okay, so that's the major two that came out with negative earnings. It's not so much that they had negative earnings. It's the forecast going forward. It looks pretty bad, at least from Jamie Dimon's perspective. And if you look at the weekly, you know, this has clearly been in effect for quite some time for Morgan Stanley. I mean, they've been selling off since middle of 2021. Excellent. Thank you, guys. Appreciate it. Been selling off since 2021. You know, if I look at this Morgan Stanley chart on a weekly basis, my eyes are drawn instinctively to gaps. I know it's just can be kind of stupid for some people to people like, oh, whatever, gaps are dumb. Well, look, if I put these lines right here, there's a big gap that started at 51.70 that goes all the way back into 2020, and you've got another one way back here. Now, I'm not saying that Morgan Stanley is going to fall to those levels, but if they do, in fact, have such a bleak picture for the markets going forward, defaulting, one of the things that JP Morgan commented on, or Jamie Dimon commented on, he said It's the consumer's ability to continue to spend has been doing rather well. And again, I've been saying, stop spending, guys. Save your money, put it in the bank. Don't put it in the bank, but load up on cash for a while, because that'll allow you to buy deeper down if this market does continue to sell off. And that pretty much is what Jamie Dimon echoed today. He said, look, consumers are still spending. That's great. That's going to keep our markets moving up. Well, at some point, they're going to not be spending and markets won't be moving up. So we'll have to see how that goes going forward. But here is that Morgan Stanley chart, obviously due for a pullback. I know a lot of you loved watching Scott McCormick and his Fibonacci stuff the other day. I personally do like retracements, and you notice that the 50% retracement on this fib line that's been drawn here, that doesn't really, does that 50%? Yeah, I guess that's 50%. It seems weird that that's 50%. It's because I'm on logarithmic. There we go. That's why. I was like, wait a minute, that looked really weird. That 50% retracement is down here right around $68, and we're at 70, call it 75, 74.60 right now. This might be that next logical target, which of course was the origin of a drop and then a rip out. So keep your eyes on that one. Beats aside to censor me. Yeah, censor me all you want. And let's lastly look at JP Morgan's chart, just see the longer picture. Clearly much worse than you saw with Morgan Stanley. I mean, this current picture right now, my brain would tell me it's going to close this gap. And I'll move this line down to this gap fill right here, 102.80. Well, we're close. You might actually see that in the next couple days if this continues to drift down. So this is on a weekly that I'm looking at here. Personally, I'm expecting there to be a bounce, but look, I was wrong on my sell-off today for the dollar index. I was expecting to see gold and silver move up, and actually went the opposite direction. So unfortunately, I'm going to be wrong sometimes. So that was your major earnings announcements for today. Economic-wise, let's check out this chart. You have PPI numbers, so they're expected to stay equal. And again, I put a lot of emphasis on yesterday's show on this data, because to me, if the PPI numbers don't increase, but CPI does, that means better profits for corporations down the road. Lo and behold, what happened? The PPI numbers surge. And let me see if I can bring you a chart of that one, just so we can take a peek at that bad boy. Tomorrow, by the way, we have retail sales numbers, which is going to be interesting as well. So here is the PPI data that came out today. It's not as bad as the CPI, right? The CPI just keeps making higher highs. But what's noteworthy is the last 3 months in a row, we've seen significant increases in PPI, Producer Price Index. So again, I don't feel like you'll see a significant difference in this data until getting into September, October-ish, when we start to see commodities impacting PPI and CPI, but not right now. All in all, I think this did paint an ugly picture for the markets going forward. Now, that said, let's take a peek at the Fed funds futures, because that has been really interesting. Remember, I am of the opinion 75 basis points. I do not think we're going to go that crazy and go to a full 1% raise. That just seems nuts. Notice we dropped back a little bit today. So yesterday we had an 80% chance of a 1-point raise, a full 100 basis points, and today it's dropped to 41%. So I think coming in line with reality, which is let's get back to 75 basis points and keep it there. So 58% right now that we're going to see a 75 basis point increase on the 27th, and a 41% chance of a full 1% increase. So maybe ask, what's PPI? So there's two major measurements of inflation. The first one is called CPI, which is Consumer Price Index. That represents a specific defined basket of goods and services, including gasoline and bread and beer and milk, butter, shirts, and things like that. So I don't know all the components of it, but this basket of goods and services is picked by the BLS, which is the Bureau of Labor Statistics. They track this basket of goods and services to see are prices increasing or decreasing. Now there's CPI, which is what you and I pay for that basket of goods and services. And then there's PPI, which is what it costs them to make that basket of goods and services. So you're looking at the consumer side and then the manufacturing side or the production side. And if there's a big difference in those two, it can give clues as to where that economy may be going forward based off that. Right now, you're seeing increase in consumer price index, meaning you and I are paying much higher prices to the tune of 1.3% increase month over month, which is pretty obscene. Remember, inflation numbers, well, let me ask you this, just so we can have interaction. What is the Fed targeting as an inflation rate, right? What should be the number that the Fed goes, that's what we're looking for. This is where we want inflation to be over the course of a year. Throw in guesses there. I know some of you know this one pretty good. What does the Fed want inflation to be, right? What would be considered a historical norm? Now, as I wait for you guys to type that one in there, remember the CPI measures month over month. So when I look back here at the PPI data, this is showing a 1.1% increase for the month, right? Not the year, the month, right? And everybody's typing it in. Fed says 2 to 3, but really 2% is what they're targeting, right? 2%. Here we have 1.1% increase in a month. Well, if you annualize that, that means you're close to 12.3% inflation. 12%, but they do have little to do with it. Correct. They do. They're obviously trying to keep that number down. Nobody wants runaway inflation like we're starting to get now. But yeah, 2% is really the number they're targeting. And that's why I think that this is so astounding is, you look at this number, well, this is only 1 month. Basically, the way that inflation is tracked here with PPI and CPI is you take the last 12 bars, right? That makes them up 1 year, and you add those all together, and that gives you your inflation rate for the past year. Well, you had 9.1 with CPI, and all of a sudden, I think you're going to get some much higher readings here with PPI. Not very good. So we did have a much higher than expected inflation number for PPI. I was actually expecting maybe this futures would have leaned more towards the 1% given such a bad PPI data number, but I think ultimately on the 27th, we will see a 75 basis point increase in the Fed funds rate. There you go. What else did I have on here that was noteworthy? Not really much. You saw the unemployment claims tick up. Now, that is not that critical, but single point data does not, in fact, make a trend. However, it is definitely higher than expected, so that's all right. And again, I believe that we'll have to wait another few months to see what the unemployment numbers start to look like. I have been seeing more statistics about layoffs, and they are increasing. And if the economy slows down more, well, we'll see unemployment increase, and then we'll have to play it by ear from there. So that is your main stuff in regards to economic and earnings announcements for today. I will run through our top 7 markets here because we have a little bit of a leapfrog, a change of pace. Could it be? Yes, we do. Karen says, if the PPI is up, why is it green? Isn't that bad? Where was it green? Was it green on this page? Oh, yeah, I don't know. I think you're referencing this one. I'm not sure why they color code those green. I'm colorblind, so it just looks like a color. I can't tell whether it's red or green, but I don't know why that would be. Because obviously, maybe it's higher than expected, so it would be green. Red would be lower than expected. I'm not sure. Is this one below it red, this core PPI? And by the way, core PPI is when you take out food and energy. So what that tells us is that components of food and energy are what are really driving this market up. So remember what we've talked about over the past couple weeks has been the commodity side. If food and energy have been pushing PPI higher, well, if all of a sudden we are seeing commodities drop to the tune of 30 to 40% and energy starts to fall, our next reading on PPI could be under 0.8. So keep that in mind. All right. Let me run through this top 7 real quick. Kind of a little bit of a shocker here today was on gold. After yesterday's trading activity, it kind of felt positive. There was some hesitation in the U.S. dollar, the Dixie. But today the dollar was surging yet again. And what did we get? We got pain in the commodity space. You saw gold have a pretty significant down day, 1.58%, making it your worst performer for my top 7 that I look at here on a regular basis. But for anybody who's in it, unfortunately, I was teaching a class this morning. Tomorrow morning, I actually have more free time, so I will be looking to be selling puts on GLD. That's my goal for tomorrow. We'll see if I can get 1% for under a month for gold, because I'm okay owning gold at 1670, 1650. You can see this line I have down here, the bottom line of the chart. That seems to be where gold has been bottoming out, at least for the past year and a half, so almost 2 years. So I'm okay selling some puts down there. If we look at GLD for a second, there's your GLD chart. Look for that 157 put. All right, I'm fine with that. Maybe if I do it for, let's see, what's today? Today's the 14th. Tomorrow's option expiration, so I'd be getting 30 days out there would be my target rate. I might actually go lower, see what the premium is like for gold, but I might be looking to, I was going to do it today, but I just had my cryptocurrency class this morning and didn't have time to trade, but tomorrow I do. So that was your biggest loser was GLD. I think that the main reason that we saw this tank like this, take a peek at the dollar index, right? The dollar was surging early on, actually gave back some of its gains, but still ripped right through that 108 108.73 mark. To me, off to the races. We've looked at this before, but if I scroll out, there really is nothing to stop the dollar index now until we get up to 113.80. So I expect there to be more power and strength behind that dollar index going forward. All right, let me move away from the weekly here and go back to the daily. Check out the Russell 2000, which was looking pretty glim early, but did manage to recoup some of its losses, ending the day down only 1.02%. 1709 is where we finished. You know, I have been focusing a lot on this most recent data, the past month of trading for these indexes, which was starting to show some strength. Notice today, the Russell 2000 came almost exactly right down to those lows we established about 2 weeks ago on July 1st. Bounced right off that one today. So this line is starting to become a little bit more significant, all right, looking to become a little bit more critical going forward for the Russell 2000 right around 1681. Dow, same picture, although the Dow has a great hammer formation today, but it did breach those lows. So I kind of feel like this strength that I saw building in the Dow, doesn't feel like it's there. So we broke the lows from last week or 2 weeks ago, so that is kind of important for me. Dow was down 0.47% to 30,613. Now the S&P. Similar picture, we did break those lows as well, so the cup and handle kind of gets negated here. You are at 3796, so call it 3800 on the S&P, and again, a big hammer formation or dragonfly doji forming as well. Yep, I will get to, I've got that posted for, I think you actually asked for that one on silver, so let me get to silver as well. Crude oil on the day. We've got hammer dragonfly dojis all over the place. You see another one with just a monstrous tail on crude oil. You know, it posted a positive day, down or up 0.18%, but look what it was down earlier on in the session. It was pretty, if I go from yesterday's closing price to our low today, it was down 6% at one point. That's nuts, and all of a sudden finished positive. So big swings out there in crude oil. This may be the return for a Friday bounce here. Again, I'm a big fan of these types of patterns. It's like a slingshot type of momentum indicator. We'll see if this one rips up Friday's session. Moving on up to the NASDAQ, kind of a boring day compared to everything else. We have not made lower lows, so this is still an intact formation. If we do get up and challenge that 12,247 mark on the triple Qs or NASDAQ 100 futures, it looks like an ascending triangle starting to form there. And finally, the biggest gainer, and a big one at that, 5.28% for Bitcoin today. Certainly I'm enjoying that one, but we'll have to see how it all pans out going forward. We still are in the sideways kind of consolidation phase I addressed on yesterday's show, but 20,650, a gain of over 5% for Bitcoin on the day. Yippee-ki-yay, enjoying it. All right, I'm seeing a whole bunch of questions roll through here. Let me make sure I get them. Positive for Forex traders and currencies. Well, Joe, I mean, that's a pretty blank statement, because what do you think is positive? Is positive that the currency goes up, or positive that there's movement in the currencies, right? If you look at the Forex markets over the past couple weeks, specifically the majors, you know, the dollar Japanese yen has been just surging. That's continuing because the dollar's strong. Dollar CAD, same thing. You have dollar Swiss franc. Now this is having, the Swiss franc is actually showing more strength against the dollar than most other currencies. Australian dollar, right, tanking. So right now, I think if you're a Forex trader, you're just going with the trend. Just find that trend and roll with it. I mean, the dollar back at parity with the euro. British pound, we were kind of, you know, not necessarily joking about this one on shows recently, but boy, it will be crazy to see that British pound back at historic lows. Again, in 1985, the British pound hit 105. We may get there. We may get there soon. So I think that it's certainly causing trends in the market, but I wouldn't say that the PPI or CPI numbers are influencing to that extent. I think it's really just the dollar index, right? Dollar's the safe haven. They're reducing money supply. They're selling bond portfolios, and demand is increasing for dollars. It's going to keep driving up the dollar, period. Clean and simple. A reduction in the rate of increase does not mean a decrease. Okay. There are plenty of help wanted signs, including pay offers up to $20 for restaurant workers. Unemployment should be sinking. I agree. I absolutely. I think it goes back to those who are not interested or just have given up looking, which is the U6 rate, right? Which would be a better number for unemployment data. How far back are gaps valid? I have no time limit on gaps. I have literally gone back and looked at gaps that were 13 years old when the NASDAQ 100 was trying to get back towards its all-time highs. I'll keep memory of them. It's not. Here's the problem I have with gap evaluation. The normal talk track by people is, oh, that represents unfilled orders, right? Oh, there were unfilled orders there on that gap up or gap down from 10 years ago. At the time, yes, there were unfilled orders, but nobody's leaving an order in the system for 13 years or 5 years or 6 years. No one is keeping an order there. They're canceling the order and moving on. However, when price is moving, individuals, yourselves, myself, or anybody who's into trading are looking for those areas where probability is that price is going to turn. And a gap is obviously one of the major ones. So they're going to look back on a price chart and just try to see where did it line up? Because what is above us or below us that could act as a magnet towards price? Well, if there's a big gap, it's going to go there. Why? Because technical analysts are going to draw lines in the chart, outline, emphasize that point, and put their buy orders right back there. There we go. Robert says, will the British pound go to parity? The odds are it's a long shot. Right now, the trend, if you had to say, given the current trend, are we going to get to parity on the British pound? I'd say yes. The trend looks really strong, but it's a long ways away. Let's be very clear. That is not a small move that has to happen. So let me real quickly just show you what that number might be if it got to parity. It's going to take me a little bit of drawing effort here, so hold on a second. We will go and snap to current price and then get all the way down here to this line. That means the British pound would have to drop 15% in purchasing power against the US dollar. Now, has it done that? Sure. It's done that a bunch of times. I mean, hell, if you go back on this daily chart, going back to January of this year to where we are today, it's down 14%. So it's not that this can't happen. It can certainly happen. It's just, it's such a strange thing because it's never happened. Now, I love that you say that, Robert. I'm a huge fan and believer, and not necessarily subliminal messaging. Let me use subliminal messaging. I absolutely believe that you can plant the seeds of thought in something, right? You can say words and create actions that will make something happen. So, for example, when I was on CNBC in January of 2008, I think I posted the video somewhere, they asked me, said, well, what's your thoughts on gold? And it was Amanda Drury, who has this lovely Australian accent. Oh, and she's like, so Merlin, what's your thoughts on gold here? Are we going to, I forget what the price was, I'll just say it was 1,800. Are we going to go to 1,800 on gold? And I was like, well, it's not a question of if, it's a question of when. I go, Amanda, when you and all your colleagues are sitting out here saying, is gold going to go to 1,800? It's like a magic thing. Everyone's watching and going, it's getting 1,800, it's getting 1,800. It just kind of pushes in that direction. So, Robert, I'm a firm believer that the more you hear the talk track that the British pound is going to go to parity, the more likely that probability is going to happen. And this chart speaks volumes. I mean, it is definitely a much weaker chart. We've been really selling off pretty much since March of 2021. It's been nothing but down. And you notice, at least in my opinion, the momentum here is increasing. It's starting to pick up more speed. And of course, that has to do with what? The fact that the dollar is now going parabolic. Now, the British pound isn't as much of a weighting in the dollar index. It's number 2. I believe that it's the euro is 50%, the pound's, this number 2 in there, and then the yen. But don't expect the pound all of a sudden get strong if the dollar keeps doing this. Same thing with Japanese yen. Japanese yen is going to continue to just get annihilated until the dollar stops moving up. And the trend is your friend. I do believe, I mentioned this yesterday, I really think we're due for a pullback, and I thought it was going to happen yesterday, but we didn't get the dollar pullback that I was anticipating. It happens. Well, Boris is leaving and Scotland wants independence. Yeah. But honestly, I'll be honest, I really don't know what the impact of Boris leaving or Scotland wanting their independence. So what does that do to the British pound? Does that make it stronger or weaker? Does it create uncertainty for the British pound? I don't know. At this point, all I can do is point at the US dollar and say, it's strong, and I can give you a litany of reasons why that dollar is so strong. Go with the lead horse. But great question. I want to see it. I would love it to go to parity because then I might plan some more trips to the UK. It's always so damn expensive when I go over to England. Hey. You come back, you're like, I'm broke and I didn't feel like I spent anything. Unbelievable. All right. So do we go through everything? We got crypto out of the way, at least Bitcoin. Judy was asking about SLV. So I think the main reason that you saw silver do this is primarily because the dollar index. Now, this has been a pretty unbelievable sell-off, especially for a commodity like silver. I am long silver, and I actually have puts that I sold at 1750. So I really doubt that I'm gonna get above 1750 by close tomorrow. So I will get some more silver added to my portfolio as a long-term hold, and I'm okay with that. If I get executed tomorrow on my silver positions, I will sell calls against those at current strike price and generate more income stream for that from that perspective. Now, if this dollar does continue, look, you're going to see more pain in silver and in gold and the other commodities we looked at, right? There was, let me look down here at the commodities side of things, lots of red, right? Lumber down 5.3% today. Cotton, another 5%. Cotton is just the story. Holy cow. I mean, I think we might have been lock limit down today. Let me just check here. Lock limit. Yeah, we lock limited down on cotton. So we're currently lock limit down as we speak right now on cotton, but look how aggressive this sell-off was. You can see, if you're ever wondering what the lock limit is, you can just tell right here. It just, when it doesn't go past a certain price, it can't legally, it'll just bounce off that one. And you know, this is, I've mentioned this before, like how do you trade a lock limit down? Well, depending on the time frame of a lock limit down, you could have bought right here. And notice that, I mean, this is a huge move up in cotton. It would have been a great opportunity from a lock limit down perspective, but very, 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 very risky. Micro silver have good enough volume for trading? I do not know, Eric. I am probably not. It's a rather new product, so this will take a while to get some liquidity going. But anyway, I just want to finish up the graphics here showing the commodity space just really following suit with what happened with the U.S. dollar. The only one that was kind of an outlier there was corn, which appears to have stabilized a little bit over the last two trading sessions. You also had with metals, right? Here's your silver down 4.5. You had palladium was down 3.7%. Copper down another 2.9. This to me is a big story, right? If the housing market is, new home construction is uses so much copper, well, you know, we have in the past 27 trading sessions seen copper slide 30%. So, you know, inflation is definitely going to take a dent. We're going to see a dent in inflation because of some of this stuff. Platinum down 1.65%, and that's it. And I guess we could bring up uranium futures here for Brendan, who doesn't watch the show anymore, but uranium down 0.97%. What about Nana Bitcoin? Nana Bitcoin? What are you talking about, Nana? Isn't the Nana like your grandma? Oh, my grandma's Bitcoin. I'm not sure what you mean by Nana. Wonder why cotton is doing that. I think part of the reason, Margaret, is, as I mentioned the other day, if you look at who's one of the major consumers of cotton, it's going to be textile manufacturers, and that puts China in the number one position. China has to take the yuan and convert it to dollars to buy cotton because cotton's priced in dollars, right? So let's just say that the yuan and cotton and the dollar are pegged. I'm making this up, that they're not, but let's just assume that they're pegged 1-to-1, right? If you have the yuan and the dollar locked, they're always going to be equal, and cotton drops in price, China can buy more cotton because they have to convert to dollars, right? So they'll convert to dollars, and if the price of cotton falls, they'll be able to buy more. Unfortunately, they have to convert the yuan to US dollars. So what you're going to see is China has to now take yuan, and they get less dollars because the currency, the dollar is so strong, China's getting less dollars for the yuan. So what you had before was cotton was on a huge rally up, very steep incline, so was the dollar. So it's a double whammy for China. Not only does it cost them more to buy dollars, but their dollars are buying them fewer cotton. So that's the main reason. That's the main reason, I think, why you're seeing cotton. And what will happen, as we talk about so often, the cure for a high price is a higher price. China will start to look elsewhere, and from what I've been reading, they're looking over at Brazil going, we will take your cotton because it's too expensive in the U.S. Done. Merlin, what you think shorting Morgan Stanley and BlackRock? Well, number one, I would say careful with that because BK reports earnings, not Burger King, but BlackRock. I think I actually have I didn't put the earnings economic counter on here. Sometimes I blow my mind. BK has not reported earnings yet. Okay, so Bank of New York Mellon, I believe, is tomorrow. Yes, they're tomorrow reporting earnings. So I wouldn't touch that one yet. If you look at Morgan Stanley, if anything, I think you're going to have a bounce. I think you're going to see a price pop. However, What do I always say, NJ? The trend is your friend until the bend at the end. And the trend in financials right now is down, which is surprising because financials typically do well in a raising rate environment, which has been kind of a shocker because look at financials. We started raising rates. This should have actually performed rather well. Oh, it has not. It's been getting slaughtered. It's getting absolutely beaten down on XLF. So I wouldn't be shorting Morgan Stanley right now, but if we get back up to this 80 mark and start to hit some old supply levels, it's worth a shot. Absolutely worth a shot, especially if the forecast is so bleak for the markets going forward. Do you think SPY goes higher tomorrow? Sorry, not sure. You've already talked about that. Do I think SPY goes higher tomorrow? Well, if I look at the price pattern here, the answer is very, very simple. Absolutely, I think the market's going higher tomorrow. But that's just off this candlestick formation. We've seen over the past couple of weeks slight strength increases. Today, one of the noteworthy pieces was obviously the candle which formed, which is a dragonfly doji, usually means higher prices. But I don't see volume increasing significantly. If I saw today's candle with climactic volume, rubbing my hands together, loving it because I'm expecting there to be a much bigger move up, right? Candles like this by themselves I like, but if I have them with climactic volume, great. Notice the volume we had back here on the 13th of June. Let me see if I can move this chart a little bit and maybe make it so it doesn't. We had volume on the E-mini futures. There's 3.1 million traded. Today, we had 1.8. So, if we had double the volume, oh yeah, great, panic, fear, chaos. But we don't have that today. So this isn't the best trading pattern, but I am anticipating a little bit of a market rally tomorrow just based off this formation. Again, I have to say that with a caveat, an asterisk, right? I'm anticipating there being a market rally, but if the market doesn't rally tomorrow and sells off, fine with me. I will have to just open up short positions and go short in the morning or whenever I end up getting to trade. So, I do think it's going to move up tomorrow. If I had to do like a probability guess, look, anything can change between here and tomorrow morning's open. You all know that. I mean, anything can happen around the world, but erases everything. However, based off of just pure momentum, and if everything remains the same, I would say up day tomorrow, and I would say a pretty good probability of it. But, going into the weekend with all this uncertainty and fear, who knows? I try not to put that hard of anticipation about what's going to happen with prices. I'll put a plan in place. If the plan works, great. If it doesn't, I move on to something else, period. Nano. I'm not sure, Margaret, if this is the one that you're asking about. You're talking a Nanoco group? I just don't know. Oh, you mean the Nano Futures? Got it. Okay, yes. Don't trade them. I don't know. One way to check it, you can go to the CME and find all the specs on that. But if I trade index futures, I'm generally doing S&P, NASDAQ, and Russell are the three main things I trade. I really don't trade too much commodity futures either. There's just too many contract differences. There's all kinds of weird specs for each one and lock limits. Drives me nuts. I find plenty of opportunity in the other markets I'm trading with. All right, let me go to some listener questions here because there were some. Tien, I hope I pronounced your name right. Tien, or Tien, I think it's Tien. Please look at Apple on today's show. All right, and again, you can email me questions anytime at TraderMerlin@gmail.com or put them down below the YouTube video. That is probably the easiest and best way to help out the show, other than subscribing and liking and sharing all that stuff. All right, here is Apple. We have this yellow box drawn, and this was drawn actually a couple days ago, where it's a nice supply zone, right around 148, right? Came right back up to it, hit it today, showing a lot more strength in the overall market because obviously the indexes were trending down over the past couple weeks, gaining a little strength, but Apple has been making higher highs. So it actually looks better than the overall market. At this moment right now, I would say it's a shorting opportunity for Apple, only based off of this technical pattern, right? Just the fact that we're coming back in a supply. Notice we've been in a downtrend since January, and that downtrend is most likely going to continue. So if you're downtrend since January, it's a retracement back into a supply zone. This represents a potential shorting opportunity. Now, what you've noticed right there is I'm conflicting myself. Am I not? I said, look, I'm bullish on the markets for tomorrow, but I'm bearish on Apple. It's simply price charts. Apple didn't have a hammer formation today. S&P, NASDAQ, Russell, gold, all had hammer formations. Therefore, I'm more bullish on those. However, Apple is coming right into overhead supply. Now, if the S&P rips up tomorrow, then Apple's going to go right through this zone. So take that for what it's worth. I'm not, you're not going to get a market rally and Apple kind of languish and not perform with it, right? Apple, it will probably have a big day if the NASDAQ and S&P rally tomorrow. But just based off this, maybe you want to wait and see what happens on the open. If we get a big gap up, probably want to hold off. If the market starts showing weakness on the open and selling off, then maybe Apple becomes a short candidate. But right now, it's stronger than the overall market. So that is a pretty important piece for me to pay attention to. What do you think of the chart of BKSY? Black Sky Technology. Boring. So you look at, I don't know what Black Sky Technology does. First off, I can see, can I even trade it? So I can't trade. Oh, yeah, you've got really low volume, roughly 1 million. So this is just barely making it into my potential trade category. Now, look, if you look what's been going on here with this Black Sky Technology, you've really been stuck in a somewhat confined range. Now, granted, it has these huge whipsaws, but right now I would say boring and wait for it to break outside that yellow box. Honestly, this is a pretty dangerous security. If you look at the moves, first off, going back here, who knows what caused all this, but they were flatlining for a long time. My guess is this is a SPAC, right? This is probably a SPAC, Specialty Purpose Acquisition Corporation. They've had their big up moments and all of a sudden cratered. Don't know exactly what they're doing, but my guess is this is a SPAC, and they're getting throttled right now. If they are going to do the deal, pay attention to what that deal is. If they're not going to go to do the deal, they have 2 years before the money has to be returned in a specialty purpose acquisition company. Who knows? Do you get that money back at 10, which was usually the issue price? But chart looks pretty boring right now. Boring, and it's just really volatile and not the best volume. So I would move away. I was watching her thing. You're like, wow, I feel like I've heard him say all this stuff before. You watched yesterday's show, huh? Let me go down the list. How do you make a judgment call first 5 minutes of the market opening? Very, very tough question. So my recommendation or suggestion to anybody who's getting into short-term day trading is you stay out of the market at the opening 15. Now, back in my heyday, when I was doing those hundreds of trades per day, that was the best time to trade, was the opening 15, because the movements were so wild and so volatile. As we look now, I still would recommend for people to stay out, because what you generally get is order filling, and that order filling can be extremely volatile. And what I've found is right around the 15-minute mark is where the order filling kind of stops and the market starts to take direction, or that security will take a direction. So you'll see quite often in that 15-minute mark for a security, it'll change direction. So to me, that is an important piece as a day trader to pay attention to. But I generally encourage people just to stay out that opening 15 minutes. I get in, but it's, again, do as I say, not as I do, right? You have to kind of get comfortable with it. Trading that opening 15 is the most volatile time of day. It's juggling chainsaws. It's wild. And you can get whipsawed really bad. So especially for anybody who's learning or got not a lot of experience under their belt, stay out of that opening 15. I bet your eyes are tired by the end of day trading. Yeah. I was tired. It's a full body exhaustion. I mean, look, I was doing 550 trades a day, and you're sitting there for 6.5 hours until I finally realized that I don't need to sit there for 6.5 hours. Find the times you make money and just trade those. Oh, yes, Ron, I cannot wait. Whiskey day tomorrow. I'm looking forward to it. Let's see. SPX dumped on the news and almost closed the gap. I guess you can call it a dragonfly. Watch the gap and the trend continue. I will just sell condors. Well, I had SPX right here, so there's your SPX. So it's a different looking candle, obviously. When you look at the index, it's going to be slightly different versus the futures market, which are 24 hours. I'm looking at the futures, seeing this big dragonfly doji. But if you look at SPY, right, you don't get that. You actually get a this is actually called a dark cloud cover. Well, dark cloud cover would be if it's at the top. But essentially what happens is you have a candle that's bullish that comes about halfway through the previous day. And then there's follow through, in this case, to the upside. So all in all, it's still pointing to a bullish day tomorrow. But like I say, we have, 15, 16, 17 hours before the markets open up. So it could be wildly different by then. So I did BKSY. Dow Jones Industrial Average, 28,000 by October. Sure. I don't see that being out of the ordinary. 28,000 is only right here. That's not that far away. And of course, 28 what? Is it 28 even? Well, yeah, that's a little bit harder. But if I go 28.9, we're almost there. Another few percentage points, we got it. All right, let me go one more. Can you please look at TSMC? Taiwan Semiconductor. TSMC, did I type it right? Yeah, looks like crap. After earnings, it seems like price rallying to supply. What? I'm not getting the chart here. Something's wrong with my chart. Let me real quickly try that again. Huh. I'm not sure why I'm not getting Taiwan Semiconductor. I have this weird candle right here. That is very odd. Something's fishy with my Taiwan Semiconductor chart. So I'm not sure why I can't pull this one up. Sorry there, Judy. Bought December 16th, 120 put on Apple. You did? Do you think that trend's going to keep on going, huh? Well, look, Apple is the juggernaut. Careful shorting the strongest, most powerful companies in the world. You bought the 120s, which puts you right here. Definitely doable for December. And the good news there is you bought yourself some time, right? You've got December, November, October, September, August. You got at least 5 months, so some good time. I do personally think that you'll start to see the market stabilize and potentially rally. Oh, TSM, thank you. Rally by the end of the year. TSM. That's it. I don't know why I was kind of weird one. It still was Taiwan Semiconductor, but something different. Okay. As far as Taiwan Semiconductor, it looks just like the tech stocks we've been eyeballing, right? You're in a downtrend. To me, you've got rally back up to the supply zone right around $86, $87, and then continue that trend. Now, I know at some point you're going to see this thing move back to the upside. I mean, Taiwan Semiconductor, again, is the behemoth out there in the industry. It's not like they're going to keep on going all the way down to zero. It's already down roughly 50% just from the 2020 highs. So I say keep shorting any rallies until this thing starts to turn and starts making some new highs. Then you just got to flip your mindset and go long on it. But trend's your friend. They're all headed. Everything is sloping down right now. So short those rallies and look for more downside movement. That at least is my take on it. You have this glorious double top going from 2021 to 2022, and now you're just selling off. So regardless of what you think about the companies, how you feel about the management, executive, products, distribution, who cares? It's just price is going down. That's the only thing that matters at this point. So that would my easy way out of this one is just short any rallies into supply. I don't trade SPX. I do SPY. No particular reason why. I just have always done that. There's no real personal preference. Merlin's got time to buy a bunch of American silver coins at current prices, maybe $16 per ounce. Yeah, we could get lower than that. We could get lower than that, NJ. I don't really want to hold silver gold coins; they tarnish. But I will buy some. I'll buy some more gold coins in the future. Lee asked me, "What's my take on bank stocks?" Again, I think the overall picture is very telling. Let's start off with XLF and move our way up. Here's financials. All right, what do I have? I've got a beautiful downtrend. Lower highs, lower lows. No reason to think that this is going to stop anytime soon. So I could run through the individual companies, your Goldman Sachs, etc. But I think the overall picture, my talk track's not going to change. It's going to say keep shorting rallies and stay short until this changes, which it has not. All right, we have not seen a higher high put in since January. So lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. It's just a broken record. Keep it going, right? All right, Judy. So I saw your I put this one in here. Judy asked about this earlier. Unfortunately, it looks like silver is going to keep on drifting down here a bit, so we'll have to see how that pans out. But primarily to the U.S. dollar would be my my justification for that. What else do I have? Edward, you asked this question yesterday, and I apologize I didn't get to it. I don't remember if I did or not because I got too many things going on. Here's his question. Oh, NJ, thank you very much. I will definitely put that in the whiskey fund. Actually, you know where that ends up going? It ends up going into the fees because I have to pay monthly for web hosting and to upload the podcast. So all those go to the podcast fees. So anything left over goes to the whiskey fund. All right, Edward, who I think that might be right there. Merlin, have you ever traded carbon offsets, and how would you do this? I have not. I'll be honest, I don't know squat about them. It might be something I look into, but I don't know anything about carbon offsets or trading carbon credits, but I hear more and more about it, so I may start looking into that, but I've got so many things to trade already. So Edward asked, and this was from yesterday. Today, the 10-year futures, there was a 9:30 candle, followed by two huge candles to the upside on a 15-minute chart, which is a large move. Did not see any news to that extent, which would have caused that big move. So let me bring up that chart here real quick. I saw that as well and was kind of surprised by it. So I'll go to a 15-minute time frame, and I'll show you the two he was talking about. Well, maybe I won't. No, we're not going that far back. Hold on. Hold up. 15 minutes. It couldn't have been this one right here. That was this morning. I thought it was the 13th, right? It's this one because this is the yield. So you were looking at the ZN. That's what it was. There you go. That's the chart you're looking at. So Edward was asking, what caused this, right? Because you see that big drop that happened, and all of a sudden you have this huge spike. To me, it's just group psychology and behavior. I don't think there was anything specifically that would have caused that 10-year futures product to spike or yields to drop so aggressively, right? It's just the nature of the beast. And I've talked about this before, where when you have a major economic announcement, whether it's CPI or interest rate announcement, there's these professional traders are sitting with their hands over the keyboards just watching, going, which way are we going? And they'll be buying a whole bunch and creating these big moves. And my guess is that's probably what happened here. If you look at it, let me add in volume. Notice the volume surges. Right here you have the announcement on the from the FOMC, tanked. This wasn't FOMC, this is CPI. Tanked real quick. And then all of a sudden, later on, you see massive volume come in and rip this thing right back up. I don't know what the intention was of those buyers out there. For whatever reason, maybe they thought they were getting a good deal. Maybe they thought the yields are going to start to go down. Maybe they thought it was overdone because the expectation jumped from 75 basis points to 1 basis point. So there's a lot of factors out there. Unfortunately, those types of ones, I try not to dig too deep in exactly what may have caused that move. Personally, I feel like I'm wasting my time trying to explain something that already happened. I'll just go, okay, let me use those levels that may have been defined by that price action and move forward from there and hopefully make some good trades off of that one. All right, let me bring up two things here. We have to obviously wrap things up because I want to go play with the dogs at the park because it's a gorgeous day and do some trivia tonight. Thank you, Mimi. Appreciate that very much. You'll go towards my, you're going to pay my Libsyn fees so I can host the podcast. Even though most of you guys watch live here, I still do the podcast, upload the podcast every day so that Ed up in San Jose can listen. He's the only listener on the podcast. No, I'm kidding. I'm sure there's others. If you are listening to the podcast, watch the show live one day and interact with us. Have some fun. Here is your earnings calendar for tomorrow. I want to at least bring this, or economic calendar for tomorrow, just so we can get this stuff out of the way. That was today. Let me just go here. E2. This is your economic calendar for tomorrow. Now, it is no slouch of a day. It is a huge day, actually. Look at all those announcements for the U.S. It's very, very busy, chocked full. You start things off with Canada. They've got a couple announcements, foreign security purchases and wholesale sales. But then it is USA all day long. You've got retail sales numbers, Empire State Manufacturing Index, import prices, capacity utilization rate, industrial production, business inventories, University of Michigan consumer sentiment, and inflation expectations. I'm out of breath saying all that. This is big. Now, of course, they're not all weighed equally, right? Like one of the biggest one you're going to see tomorrow, the most important here. Oh, I can't draw on this chart. Dab nabbit. Retail sales. That's obviously going to be the most important one. I am interested to see this Empire State Manufacturing Index because from a manufacturing perspective, that's kind of the big dog out there. And you'll notice expectations are negative number. Anything below 0 is a sign of economic contraction. Let me ask you, if you have if you're a business owner and you have economic contraction, meaning things are slowing down in your city, maybe less buying going on by consumers, you're not going to be making as much, what do you have to do to stay afloat? As a business, if everything around you is starting to slow down, you have to do a certain thing, especially if you have a lot of these individuals. If you have employees, you're going to have to start making layoffs. So if this Empire State Manufacturing Index number comes out much lower, that's a pretty negative sign that you're going to start to see more layoffs in the Empire State area. Plus, the Empire State, talking about New York, there are a lot of people who are paying a ton of money to live in New York, and if there is a slight decline in jobs, that could have a big impact on the New York area. So that's my number 2 important one. Number 1 is retail sales for sure. They're expecting a pretty good pop in retail sales. Are those numbers for June or July? Well, this is reflecting the previous month, so it's the July number, but it represents June, right? Because we're not through July, so we can't have it represent July yet. And then you have a couple of them down here as well. Industrial production, it obviously would be cool to see, keep track of what these numbers reflect, but these aren't the major market movers. Yes, and slow inventory purchases too. Right. If I'm manufacturing stuff, I may buy less of the goods and services I need to manufacture my goods because I realize they're not selling. Yes, Chris is the one-man show. You can't fire yourself, buddy. You probably talk to yourself quite a bit at the office, though. Yeah, you got to cut costs. You're cutting costs. You're going to produce a little bit less because you don't want inventory to be building up on your factory. So, this is... I know a lot of people don't focus on these manufacturing index numbers, but we've got a whole slew of them coming out. You've got the Empire, the Philly. There's a few of them that come out that represent different geographical areas of the U.S. So let's keep an eye on that one. And then lastly, I think I actually put this in the slides, but I will just go here and open up, is your earnings for tomorrow. This is the big stuff. Now, obviously, we had JP Morgan and Morgan Stanley today, but tomorrow I'll start with the banks. This is all before market open because it's Friday. You have Citigroup, Wells Fargo, The Progressive, BlackRock, U.S. Bancorp, PNC Financial, and then Bank of New York Mellon, which was asked about today, asking, what do you think about shorting BK? Wait till after that announcement and see what ultimately pans out there. And then outside of financials, which just dominates tomorrow, you have UNH, United Health Group, which is a pretty popular one that a lot of people like to take a peek at. So UNH reporting earnings tomorrow, and they've actually had a pretty volatile move as everything else. So even though it's in the healthcare sector, they've been holding up stronger than most, but their earnings are tomorrow. So there you go. Okay, I think I covered it. We're out before an hour. So much for my 30-minute shows. This was, again, supposed to be a 30-minute show, and I don't think I've ever done one. All right, for tomorrow, I will have whiskey, which will be my guest for the show tomorrow. That's going to be, we do for a Green Friday. Been a while. Now we'll see. We'll see what happens. But tomorrow will be just Q&A day. We'll have some fun, go over just some topics and things you're going to want to cover. If you have things you want me to discuss, put them down below the YouTube video there, or email me at TraderMerlin@gmail.com. That's the easy way. I did book Bill Addis for Monday's show just because it's been so wild. I figured let's get him on early, see what his thoughts are with regards to the Fed announcements and interest rates and bond products, etc. Michael says, what happens if you buy options that expire tomorrow, July 15th, and you get into the hospital tonight and cannot close out the option and do not have the money in the account? Well, if you bought options, they're just going to expire potentially worthless. You have the right but not the obligation to buy something. If you sold the obligations and they expire in the money, you're on the hook, but they won't let you sell without having the cash to cover the position. Yep, no problem, Andrew. Hey, good to see you. Been a while. Exactly. Lisa says, I'll let you know if you have to transfer funds over. Right. What's the best whiskey you've had, which you've ever tasted? I don't know. That's like saying, what's the best food I've ever had? I don't know. I've been liking the Bibb & Tucker 6-year. Also like Blanton's, like Eagle Rare. Masterson's Rye is a really good one. But anyway, we should do a separate show just on whiskeys. All right, that's going to do it for me. I'm going to go out and enjoy the rest of my day. Hope you guys enjoyed today's show. Be careful out there for the markets. I'm expecting some bullish activity for tomorrow. May not get it. We'll have to play it by ear. But right now, looking to be a bullish Friday. I'll see you guys on the show on Friday afternoon. Take care, everyone.